everyone, and welcome into crushthestreet.com. I got a timely interview for everyone today. We're going to be talking about crypto, the market, and I couldn't think of a better person to have on the show than Ben Perrin, BTC Sessions. You can find him under BTC Sessions if you look for him on YouTube or on Twitter, and his website, btcsessions.ca, right, Ben?
Yeah, that's absolutely right.
Okay. He's an expert when it comes to the crypto markets. He's someone who's just been in it. Now, if you've been in it for more than 6 months or a year, you're automatically a veteran now because of how fast this works. Now, he's been in it since the early days, 2014. You know, it's going on 4 years now. And he's built up quite a following, and we're going to get his thoughts on what's going on right now in the market. Ben, thanks for coming on Crush the Street with me today.
Yeah, thanks for having me. It's been a while. Haven't seen you for about a year now, so I'm super excited to be back.
Well, I'm looking at Bitcoin now, and we'll start the conversation off here. Bitcoin dominance is right at about 55% out of the entire market cap. And as it relates to the bear market, it does really seem like there's a lot of consolidation happening into Bitcoin as we go into this bear market environment. So maybe you could shed some light as to what we're seeing here.
Yeah, I think in any crypto bear market, you're going to see that flow into Bitcoin. If people decide to stay in crypto, then they're going to want to put their money in what they perceive to be a sure bet. And it's just that Bitcoin's been around for, it's going to be a decade on January 3rd, and it has never dropped from that top spot. And so I think when you're talking about people that have invested money and they're unsure what to do, if they're not taking money out into their local fiat currency, then they're going to be, you know, driven towards Bitcoin unless they still find some of the risk of the alts appealing and the potential upside there. So I think it's just a natural thing that people are doing this.
So does it say anything about Bitcoin that it is sort of the gold standard, the safe haven within the cryptocurrency market, that people are going back into Bitcoin? And, you know, we were talking before the show here how, you know, 5-10 years from now, we could see a completely different top 10 list on the top cryptos out there. But given that Bitcoin has such a strong first mover advantage, do you see this being a solidified benefit for Bitcoin? And should we be thinking about it in terms of, hey, this is the one that we should put our trust in because of all that's been built out and, you know, the conventional belief in it?
Yeah, I think over time, as I've been in cryptocurrency, so I started in around the beginning of 2014, so almost going on 5 years now, and the longer I've been in it, the more value I've placed on Bitcoin itself, and actually the less interested I've become in some of these alternative currencies, and part of the reason for that is that first mover advantage, of course. I tend to lean towards things that have less of a governance model. I like the idea that there's no leader in Bitcoin. I like that it's almost kind of this anarchist, you know, everybody's at each other's throats. I know that seems scary to people on the outside, but that's kind of what the system was built on. When I look back a few years at the top 10 coins, if you look at any screen captures from CoinMarketCap in 2014, you can look at the top 10 and I'd say about 7 of them, you'd go, what are those? I have no idea what coin that is. The only ones that were still there besides Bitcoin in the top 10 are Litecoin and Ripple, to tell you the truth. And it's interesting watching if you track the value of Litecoin versus Bitcoin, for instance. Litecoin had a crazy run in 2017, and everybody thinks, oh, when it hit $300 and something, that must have been the all-time high. Well, it was in dollars, but it was not in Bitcoin. The all-time high for Litecoin in terms of Bitcoin was back in 2013, and it was between 4 and 5% of a Bitcoin. The high in 2017 for Litecoin was between 2 and 3% of a Bitcoin. So had you just held Bitcoin in that time, even at the peak, you still would have been down by almost half.
Wow. That's interesting when you put things in terms of Bitcoin. We have seen Bitcoin come down, though. I mean, from a nominal level, 20,000 to, just right at around $3,500 as we do this interview. That's a big price drop. And something we mentioned in the pre-interview here is, if you told me we were going to be in 2018 at $3,500 Bitcoin back in 2016, I would have been, wow, that's a pretty high price projection from where we were. But having been that we've gone to 20,000, it seems like a bloodbath being at $3,500 right now. So maybe it's just some thoughts on that.
Yeah, I mean, I don't think the extreme price volatility is going anywhere anytime soon. Part of either, depending on how you view it, part of the positive or negative of Bitcoin is that there is no kind of lender of last resort, person to bail it out if something goes sideways, if the market has a sentiment one way or the other. There's no real person behind the scenes that can say, whoa, we need to slow this down. And again, to me, that's an attractive quality. I don't like the idea of somebody behind the scenes pulling the strings in that essence. I prefer the market to do its thing and to set a price itself. Obviously, towards the end of 2017, we saw irrational exuberance across the entire crypto space. But I think until that market cap for Bitcoin and whatever currencies continue to exist gets high enough that they can't be batted around by some sells of a few $1,000,000, I don't see it going away. And so from my perspective, I'm looking at it from a viewpoint of what's going to happen 5 years from now, 10 years from now. I'm not looking at it for a 1-year gain. And so I think a lot of people that were jumping in November, December of 2017 were doing just that, right? They were seeing, oh, this thing has gone from $1,000 to 10,000 to 20,000. I'm going to jump in now because it's going to go up forever. Well, if the only reason you bought is because it went up, then you're going to sell because it's going down. So I think we're just seeing a lot of that right now.
Yeah, no, absolutely. And points well taken. So interesting thing, last year when Bitcoin had its big hard fork and we had Bitcoin Cash, it seemed like it added market cap to the entire space. It brought people in and it didn't hurt the space as much as everyone thought it was going to at the time with all the controversy, the confusion. But fast forward a little bit and, looking at this latest hard fork within Bitcoin Cash, like a derivative of a derivative of Bitcoin, we have seen it kind of add to the negativity in the space, and it highly correlated with that fall that Bitcoin had from $6,000, which it was there for quite a while, from August to November, and then now down in the $3,000 range. So what's your thoughts on this hard fork? Are they dilutive? Are they confusing to the average person who doesn't know a whole lot about cryptocurrencies? What are your thoughts?
Yeah, I think in general, the concept of a fork, other than for people that have been in crypto for quite some time, is a confusing one. And that's going to take time for people to wrap their heads around. I mean, most people have never held any cryptocurrency, let alone understood anything outside of Bitcoin. So it is going to take some time before people understand what's happening there. That said, I honestly don't think that the fork itself really affected the market other than for Bitcoin Cash, if it's still called that, and then Bitcoin SV. I think, sure, it was used as an explanation as to what was happening, but I believe the markets were headed that way anyways. I think the general sentiment of the entire market was already in a downtrend. And in my opinion, other than major news, I think that whatever direction the market is going, that's the news that gets picked and kind of spread everywhere. There's a ton of positive, amazing developments that are happening right now. The thing is, nobody cares because the price is down. Those could be filling the headlines, but they're not. And I think until the market turns around, you're not going to see a ton of those positive headlines. So the fork to me was very interesting because I believe the more forks of Bitcoin that there are and the more that they fork off between themselves, it ends up really, really clarifying what Bitcoin is and what Bitcoin isn't. Because when you have a fork off of Bitcoin Cash, it's abundantly evident that that's not Bitcoin. And so it just, in my mind, has really propelled Bitcoin to a place where now, even when it comes to social, I don't know if I want to refer to it as an attack, but when you come into those social vectors where people are trying to say this is the real Bitcoin, well, it's evidently that that's not the case.
Well, that's actually very interesting. Something that I would point out is I would agree with you. Last year, Bitcoin Cash was fighting for, top spot in Bitcoin.
Mm-hmm.
And they're like at this, the equal parallel level in some way. But as it continues to go down the chains, I agree with you. I think people are going to say, hey, it's so far removed from where Bitcoin is and where it stands as the safe haven, as the one true Bitcoin out there. So as it pertains to sound money then, which is why I came across Bitcoin in the first place, you think that this solidifies Bitcoin further as the sound money? Because I actually tend to agree with some of the naysayers out there that, forks and derivatives and, competing currencies of Bitcoin and people potentially dropping one for another is potentially dilutive for something that's supposed to be a sound money vehicle. So some thoughts there.
Now, I do have worries about dilution, but not through forks. The reason being is let's look at traditional currencies, US dollars versus Venezuelan bolivar. If Venezuela is inflating the hell out of its currency, that really has no bearing on the US dollar. If people really like copper, it really has no bearing on gold. So in this sense, when people are creating new cryptocurrencies, it doesn't dilute Bitcoin itself because Bitcoin remains 21 million. That's it. What I do worry about, however, are some of the traditional markets jumping in, and where you're going to get things like ETFs, and you can get rehypothecation, which for people who are unfamiliar, essentially people giving an IOU and creating artificial supply of the Bitcoin that exists. And so I do worry about traditional financial institutions essentially going fractional reserve with Bitcoin, because that would technically inflate the supply.
Anecdotally, I actually agree with you, but my instinct says that, I think any news in terms of adoption, mainstream adoption, futures contracts, ETFs, all of these different things in the interim will actually be positive for Bitcoin in the short term until we get to some sort of saturated phase where it starts to hum maybe at a certain price. And then at that point, I tend to think the manipulation and the rehypothecation starts to become an issue. But I'm optimistic that any news when it comes to, the fundamental build out and the marketing when it comes to Bitcoin is going to be positive. Now, in the face of a bear market, I think fundamentals are going to be defied by the price in the short term here. We might have the greatest fundamentals possible, but the price might not reflect it for a period of time until we completely wash out this bear market sector.
Yeah, and I'd agree with you. The other thing that kind of puts my worries at bay is the fact that Bitcoin is so easily auditable. So let's say there were a ton of ETFs out there, and there were essentially contracts for 22 million Bitcoin. Well, it's going to be super evident right away that somebody's not holding enough Bitcoin to be solvent. And I think that when we see it get to that point, it causes enough of a spook in the market where people can audit real time and say, oh, there's not enough Bitcoin going around here. I think people, especially people in crypto, are leaning towards the idea of making sure we hold these entities responsible for actually staying solvent.
Well, that's interesting. You mentioned some news that's buzzing around the internet. Maybe you can share it with us. I think it's absolutely amazing. Trace Mayer is somebody who's been on the show, and we're very appreciative for his insight and coming on the show at very timely times. So tell us about this news, if you would.
Yeah. So Trace Mayer, again, a guy I really, really respect. I've watched a ton of his content, listened to his podcast, had him on the show before as well. And he is championing something called Proof of Keys, which is happening on January 3rd coming up. And essentially, the idea is that people are encouraged to remove all of their cryptocurrency. I mean, he's heavy Bitcoin, but essentially remove your cryptocurrency from online exchanges to ensure that they are solvent and to ensure that you know how to hold your own keys and be more or less self-sovereign, being able to hold your own money and not have to rely on another entity to do it for you. So it will be very interesting to see if enough people jump on board with this, which I think it's a fantastic idea. Only in crypto would you ever see a yearly organized bank run. It's incredible. So I'm very excited to see what happens. I'm also very excited to see how some of these exchanges hold up, because I'm sure some of them are doing a good job, but others maybe not so much. And if I was an exchange that's been running fractional reserve without keeping my users privy, I'd be sweating a little bit right now.
Yep. No, that's an interesting thing. And I think the Bitcoin, the cryptocurrency community might still be small enough to actually have a material impact on this and to really audit the institutions and the third parties that are out there to prove that they are running a legitimate operation.
Mhm.
All right, Ben. So I have a question here about the security, the anonymity, and somebody mentioned this to me as a concern for why they didn't believe Bitcoin would be viable for the long term, and that is if a government or some entity wanted to shut down Bitcoin, they would go through the nodes. They'd figure out a way to attack all the nodes at once and shut it down if they wanted to. And my question to you is this a real threat, and this is something that we should be concerned about?
Yeah, so a couple thoughts there. First one is obviously it's a great idea for developers and individuals that are capable of auditing the code to always be diligent. We should always be sifting through everything and ensuring that we're looking for any possible bugs in the code that there could be. Now, it's been a decade as of January 3rd that Bitcoin's been successfully running. The uptime is something like 99.98% of the time of the past 10 years it's been running without any hitches. And I very much doubt that would be the case. There's a couple things to consider here. When somebody's running a node, they're running a version of the software that they've elected to download, and you cannot force updates on that individual software. So the tens of thousands of nodes across the globe, you cannot forcefully impose changes on them. Somebody has to elect to update them themselves. The other thing is, let's say you found a catastrophic bug in the Bitcoin software. There's not only one version of the Bitcoin software, there's multiple implementations. I believe 5 or 6 now. So perhaps you could find a catastrophic bug in one version of the software. But if you were able to exploit it in some way, shape, or form, it's very likely that it wouldn't pertain to the other implementations of Bitcoin. So is it a possibility that somebody could find something like this? Absolutely. Do I think it's likely at all? Not very. And if it was, I believe also the need to fork the code to create something that was resistant would be so completely evident across the entire network that it wouldn't be a question of whether we should do it or not. It would just be done. And I think it would be done sweepingly very quickly. So I'm not particularly worried about that. But yes, we should be diligent.
So you mentioned something earlier in this interview about you becoming more and more fond of Bitcoin. So My question to you is, are there decentralized projects out there, maybe not specifically as an endorsement of a specific coin or what have you, but use cases for blockchain that you see as viable and opportunistic as we go forward here?
That's an interesting question. There's a lot of facets to that, but so I, I think, like yourself, I came here specifically for sound money, censorship resistance, separation of money and state. Those are the things that attracted me to Bitcoin, and I see Bitcoin as the most likely project to fulfill that role successfully. When I look at other use cases, I'm very, very skeptical of things like supply chain. Reason being, the second you have a blockchain that is attached to something real world, you're injecting trust, because I have to trust the audit of the real world items into what should be a trustless system. So that's a worry of mine. And I mean, potentially you could have digital items, so tickets for concerts, things like that. The idea of actually tokenizing securities, real securities, I think could be useful. But again, the use case there, in my mind, would be the idea of being able to trade my stocks peer to peer. Now, is the SEC going to allow me to do that? Odds are no, not initially anyways. So the use cases that I see for this are that it enables people to trade more freely amongst themselves, but I think that's going to take some time. And if they were to achieve that, I'd prefer it to be built on top of one of the most robust and censorship resistant blockchains out there. So I'm looking to projects like our what's it called? RB. I think I can't quite recall, but Giacomo Zucco is a developer. He's working on something that's essentially creating assets on top of the Bitcoin blockchain. Same thing with the Liquid network. There's a lot of interesting projects there. So I'll be looking to those for that type of use case.
Well, that's awesome. Let's get your final thoughts here on Bitcoin. I know a lot of the problems that exist or that critics have for it is that it can't process a lot of payments at once. Are you optimistic that we're going to overcome this hurdle in the near term here? And will it continue to, gain the attention, garner the attention of the rest of the community, which was providing alternatives to this, but then all of a sudden Bitcoin has the solution and, completely sucks the alt community dry? Is that a potential?
Yeah. First of all, I think if somebody's coming into the space and their revolution is transactions per second, they're doing it wrong. People didn't invent Bitcoin because Visa was too slow. That wasn't the use case that it was created for. Now, is it a pain when use is way up and your transaction takes forever to clear or is more expensive than you would like? Absolutely. But I've been playing around with Lightning Network quite a bit, which essentially allows immediate and nearly free transactions. And it's coming a long way very, very quickly. Now, is it ready for mainstream? I would argue Bitcoin itself isn't ready for mainstream. So is Lightning ready for mainstream? No. But the developments I've seen this year have been incredibly promising, and it's getting easier to use. And watching the development community, it's very, very exciting. And it reminds me of 2015, 2016, where there's a lot of development going on behind the scenes that people didn't even realize. And it somewhat justified the rise of Bitcoin's price in 2017. Well, I would argue that the same type of development is happening now that will allow people to find it even more accessible and easy to use. And the next time there's a big run-up, the problems of 2017 are going to be not nearly as bad as they were in December, where transactions were difficult to get through.
Well, I got to admit, the bull market was a lot of fun.
Yes.
The bear market is a bit more depressing, but people don't make money buying in bull markets, you know, at the top. But people make money digging their heels into bear markets when they see blood in the streets and value. And if people want more information on that, they can visit my website at crushthestreet.com/crypto. We wrote a special report there. But Ben, I would want to give you an opportunity here to share a bit about you, BTC Sessions, and if people wanted to learn more about you, where they can go and what they would find.
Yeah, absolutely. So I started into cryptocurrency in early 2014 after about 3 months of kind of reading up and wrapping my head around Bitcoin. Again, I started slow. I just kind of tried to ingest as much material as I could and try to learn. And I found it difficult at first, but I got into it. A couple years in, I realized there was a real lack of educational content that was easy to consume. And, I've got a background in performing and in education. And so I just decided, well, I'll start making some videos. I'll start making one video a week, and I'll just every week I'll have a video ready. And I've been doing that since 2016, early 2016, and I haven't stopped. I feel very, very lucky with the timing there. I've amassed about 30,000 subscribers and well over 2 million views across my content now. And I've also had some great opportunities as far as meeting and working for fantastic people. And I just joined on with a company called Bull Bitcoin that specifically focuses on Bitcoin. And that's with Francis Pouliot out of Montreal. He's pretty big on crypto Twitter. But you can find me on my YouTube channel, BTC Sessions. You can find me on Twitter at BTC Sessions. And I do have a website, btcsessions.ca.
All right. Ben Perrin, everyone. Ben, thanks for coming on Crush the Street with me. Appreciate it.
Thank you so much.